Hi, Tamal. Welcome to the banking show. It is the RBI monetary policy rate. And as you've already seen, the RBI has kept the repo rate unchanged at 6.5%. Quite on expected lines. You also wrote the same thing in your column, whether it was about the RBI stance on inflation. That's all correct. So how do you describe the policy? Do you think it is a non-event?
No, I would not say it's a non-event. In fact, speculation is on, or rather, people are thinking how to describe this policy because the pause the second time, but the stance unchanged. Yes, last policy pause was pause, but not a pivot. So what is this time? Is it a hawkish pause or a dovish pause? I would say none of them. It's a very cautious pause. It's a very cautious pause. Reserve Bank of India governor said it's a pause for this policy. So he has theoretically kept it open. But I would like to believe that we have reached the end of the rate hiking cycle. He is not saying in as many words because there is a subtle shift in the way Reserve Bank of India looks at inflation. He had said that in his interaction with the media. So during the COVID time and in the aftermath of COVID, RBI was little flexible towards inflation, meaning the 6%, the upper band was fine with it. Even though it has crossed at some time. But now he is determined to bring it back to 4%. So that's the change in it. So he's very cautious. He's not taking any chances because for sustainable growth, you need 4% inflation. That's the target. He has not shifted the goalpost. So that's the key takeaway from the policy.
Since inflation is coming down, why is RBI sticking to 5% figure?
Yeah, 5.1%. It has brought down by 10 basis points from 5.2. I think that's a wise thing to do. I mean, it's probably a little conservative approach because inflation will continue to remain 4.5 at around that level till October. But the base effect will catch on from October, so it will increase. So we need to see how far we go. And you have noticed also RBI has said that the latest MSP hike, which is not factored in this 5.1%. So that could be 10-12 basis point, partly factored in, but there could be an additional 10-12 basis point impact. So because essentially for the base effect in the second half, we'll see higher inflation. So at this point of time, Reserve Bank of India would not like to commit to a number which is not achievable. So rather it's playing on the conservative side.
The road is long towards the 4% target, right?
Yep.
So when do you expect a rate cut now?
Oh, that's a very critical question. Certainly not this year. I would like to believe till December we will see a continuous pause, provided the external circumstances remain as they are. RBI governor's tone, you see, is more confident than in the past. But what has changed is he's not happy with inflation coming down to less than 5%. He is sticking to the 4% target. And at this point of time, as a even if you have 5.1% inflation estimate, that is, and 6.5% the rate, so that we are in the positive rate territory. We need to see, unless Reserve Bank sees the inflation coming down to close to 4% on a durable basis, we will not see rate cut. So the earliest rate cut we can pencil in probably sometimes in February next year, 2024, not before that.
We do have time for one more question, and there is one issue which there is a lot of interest of viewers in it, and the governor also talked about it, is this 2,000 rupee note withdrawal, and 50% of the notes that were in circulation, he said, have come back to RBI. Do you think it has played any role in the liquidity?
Of course it has. If you see that this is one of the contributing factors to the increased liquidity in the system. And our RBI governor has emphasized that RBI will be nimble-footed and it will act, to see that the inflation is in the right measure to support the growth and also to support the government borrowing program. Now, one of the contributing factors to the current slash of liquidity in the system is apart from the government spending, is the 2,000 rupee note coming 1.2 trillion worth coming back to the system. So it has played a role, and probably this is also one of the reasons why Reserve Bank of India has stuck to the stance of withdrawal of liquidity. No, had there been no such case, then the liquidity in the system would have been much less, and probably Reserve Bank of India would have looked at liquidity through a different lens. So one of the contributing factors to Reserve Bank of India sticking to the stance that withdrawal liquidity is, I believe, this withdrawal of 2,000 rupee note and the kind of money that has come back to the system.
That's a very practical approach. And as you said, as far as monetary policy goes, this is a cautious pause. And maybe by February, we will see a rate cut. Thank you, Tamal, for all your thoughts and sharing with us today. Thank you so much, Tamal. We'll see you next week.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.